Hi everyone, this is Vinod here. In today's video, we'll be looking at the technical analysis of Nifty 50 and Nifty Next 50, and we'll also be looking at the small cap indices as well as the mid cap indices. And we'll also be looking at some of the recent news or the recent developments that have caused a little bit of pullback in the market. So let's get started. So here is the overview. We look at start with the reasons why the market is cautious. So the sell-off triggered after we scaled some new all-time highs, and the main news that triggered this was the disappointing tech results, especially from Amazon, which triggered the sell-off in the Nasdaq and US markets. And there was also recent developments around the Japanese carry trade or the effects of the reverse Japanese carry trade. So to explain it in simple terms, Japan used to be a market in which it was very cheap for you to borrow money. And what some of the hedge funds did was they borrowed money for cheap and then they invested in high growing like tech stocks or in the US markets, where some of the tech stocks have been going up significantly due to the recent developments around the AI news and the future growth prospects of and now what has happened in the macro perspective is that it's no longer cheaper to borrow in Japan because they have raised their interest rate. So these hedge funds are being forced to close their positions and then pay back the Japanese markets because they have borrowed, so they have to honor that and repay back that money. So the effects of these are being carried out, and that's the reason why there was a huge sell-off in the US markets. There has been a greater than 10% correction. So we are seeing the effects of the Japanese carry trade, and then following on the disappointing tech results and the news around the Japanese carry trade, there was an important indicator which got triggered, which is the Sam's indicator. Sam's indicator is a very good predictor of recession. It is based on the US unemployment rate. So this also caused a little bit of panic in the market, which as you can see, there was a stream of bad news coming into the market. That is the disappointing tech results from the tech companies, the Japanese carry trade, and the Sam's indicator, which is a very good predictor of market recession, that got triggered. And this increased the fears of a likelihood of a recession in the US. So this also added to the panic in the market. And there is also in the near future there will be elections in the market. We do not know which direction it might go, and all these uncertainties and the bad news have resulted in a deeper correction in the US markets. So we can see that in the S&P 500 and Nasdaq 100 they have corrected more than 10%. This have resulted in other markets being following, because the US markets are the mother markets, they move other markets. So these are the disappointing results which have created a bit of uncertainty or panic in the markets, which have resulted in a sell-off. So now let's look at the Nifty 50 and Nifty Next 50 on a weekly and daily time frame. On the daily and weekly time frame. The overall trend on the daily time frame is a bit down, and we can also see that the weekly trend is also down. Now we are looking at the Nifty 50 chart on a daily time frame, as you can see from here. And compared to the US markets, the correction in Indian market has not been that great, meaning it has corrected by only a small percentage. Like you can see from here, it has corrected by only less than 5%. If you take the all-time highs that we made and the all-time the low that we made in the recent, it is less than 5%. And compared to US, it is very small correction. And we are holding on to the 50-day moving average, which is a red line. Which is a good sign that the buyers are still willing to buy at these levels. But there was a huge gap down on Monday, but over the few days throughout this week, we have regained most of the things that we have lost. But right now, we have formed a doji candle, as you can see from here, which means that neither of them are in control. The market is really cautious right now. We do not know whether it will continue to rise up from here, or we might continue further down and had a bit more of a correction. So but the thing that has been holding on really well is the domestic mutual funds, which have been continuously buying because they have a lot of cash reserves. They are continuously buying at whenever there is a fall in the market, we see a group of buyers coming and buying this dip. And that's the reason why we are holding still above the 50-day moving average of the market. And as we can see, we are still far away from the 200-day moving average and far away from the low that we made during the election results, the panic that was there around the election results. So this is on a daily time frame. Let's look at Nifty 50 on a weekly time frame as well. The weekly chart is a bit more optimistic. Like as you can see, the long wick indicates that the buyers are strongly trying to buy into this dip, but we do not know if this trend will further continue, because as I mentioned earlier, this is a very small dip when we compare to the dip that has been there in S&P 500 or in Nasdaq. Like we can look at Nasdaq, Nasdaq 100 index. As you can see, the correction has been more than 15%, and the Indian markets haven't corrected even by 5%. Now let us look at the way Nifty Next 50 has performed. The story is pretty much the same, because we are still holding above the 50-day moving average, and we are still far away or far ahead of the 200-day moving average. And even when we look at the election low, the Nifty 50 came close to the 200-day moving average and then bounced, but Nifty Next 50 did not come even close to 200-day moving average. It recovered even before that, showing that Nifty Next 50 set of companies are more stronger than the Nifty 50 companies. And here as well, we have formed a doji candle. Neither the buyers nor the sellers are in control on a daily time frame. But when we look on the weekly time frame, we can see a strong like long wick, showing that there is strong buying pressure, or this dip is being bought into by the domestic mutual funds as well as by retail investors who are buying each and every dip. And on a weekly time frame, we are way ahead of the 50 week moving average. That is for the Nifty Junior Index. And let's look at Nifty Mid Cap on a daily time frame. Yeah, just like Nifty 50, the mid caps are also showing strong strength. We have recovered almost most of the things that we lost in the beginning of this week on Monday, and we have formed a doji candle, as you can see from here. We might, as the markets are really cautious here, we might either move up due to the buying pressure that is coming in, or there might be a fall and we might move a little bit closer to the 200-day moving average. This all depends upon how the US markets move. The US markets was also cautious on Friday. The close on Friday wasn't that strong. Both the S&P 500 as well as the Nasdaq 100, we were expecting like a strong close on Friday, but the market, there's a lot of bad news or uncertainty in the market because of the Sam's indicator, the effects of Japanese reverse carry rate being played out, the disappointing tech results, and the recession, likelihood of recession. So the market is really cautious and is looking for some guidance from the policymakers, from the Fed, from the economic data that might come the next following few weeks, and only then the market will decide whether to move up or to move down. And that is for the mid cap index. And the story is pretty much the same on the small cap as well. We have strongly bounced off the 50-day moving average. This is the 50-day moving average, the red line, and we have recovered most of the things that we lost on Monday, and we have had a decent finish. I would say it's not a very strong finish on Friday because the markets are, like I said, are cautious regarding the next direction. So that's it. In today's video, we looked at Nifty 50 technical analysis of Nifty 50, Nifty Next 50, as well as the mid cap and small cap indices. And we also looked at some of the reasons why the markets are cautious. Yeah, hope you learned something new. Please do subscribe to my channel if you found some value. Thank you.